Rick, you're one of the most successful investors when it comes to resource stocks in North America in the last decades. You are well known for that. What is the reason for your great success in the last decades?
The most important reason for my success in the last decade was that I showed up. I grew up in natural resource investing, and I was one of the last men standing in the 1998 to 2002 time frame. I had trained my whole life for that set of circumstances. By 1998, I had the experience to understand the industries, the knowledge to know that they were cheap, and as a consequence of having grown a little older, I had the capital to take advantage of it. In the 1998 to 2002 time frame, in terms of junior natural resource stocks, one could almost say that I had the sector to myself. And often, when you're very lonely, you can be very successful.
You consider yourself as a contrarian investor?
I am a contrarian investor. I'm definitely a contrarian investor. The natural resources businesses are extremely cyclical. And during periods of time of low commodity prices, you increase demand and you reduce supply. As a consequence of that, prices inevitably rise from lows. The opposite occurs, however, too. During periods of high prices, supplies increase and demand reduces. So paradoxically, when the industry looks its worst, it's its most attractive. And when the industry looks like it's at its best, it's least attractive. I've said for many years, my slogan, if you will, is that in natural resources, you're either a contrarian or you're a victim.
Okay, having a look at where we now are in a market where most of the metals, oil, gas have reached good valuations. Is it hard for you to be part of the market, or do you find
it's quite hard.
Ideas?
It's quite hard. I've gone from, in 2001, being effectively fully invested to being about 60% invested as we talk today. We are finding opportunities, but the opportunities are rare, and the opportunities are frankly less attractive than the opportunities that we found when we were alone. I find myself increasingly in cash, not because I'm attracted to cash, but rather because in the near term at least, my fear is overwhelming my greed.
When it comes to gold, which is at a record high as we speak here, $1,320, is that out of any investment ideas from your point of view, or is even gold or gold stocks, do you find some attractive? Do you holding some, or do you even buy some?
Oh, sure. It's a very complex question. When gold was sub 300 US dollars an ounce, the English phrase for it was no-brainer. It was attractive from the point of view that it was very cheap. It was attractive from the point of view that nobody owned it, so you were lonely in the trade. It was also attractive from the point of view that the excesses were already building in the Western economies. That, from my point of view at least, it was obvious that gold was going to rise. We are much above that level now, closing in on 5 times that level. In fact, we are 5 times that level. Gold is no longer a contrarian investment, but I'm in the odd position that I'm still buying bullion. I own a lot of bullion personally, and I'm buying more. And for the first time in my life, really, I have a very large position that I hope declines in price. At least one like myself buys gold because one is afraid of various things. They're afraid of a breakdown in currency. They're afraid of a variety of circumstances that historically have accompanied very high gold prices. My life is very good as it is, and my suspicion is that a set of circumstances that propelled gold substantially higher would make my life much less pleasant, except for my gold holdings. And I would prefer, ironically, that my gold holdings went down in price rather than up in price. But one must insure against all contingencies, and gold has fulfilled a function for centuries of being catastrophe insurance. And while I'm not saying that catastrophe is inevitable, I do think it's a contingency worth insuring against.
Gold stocks in the last years have not outperformed gold bullion. So there's always a story or the thesis about some kind of gold mania to the end of the cycle, which is at least till now not occurring. Do you think that this will happen, or?
Three parts to that answer, I'm afraid. People believe that past is prologue, and they believe that when the gold goes up a lot, the gold stocks will go up a lot, because that's what happened in the 1970s. In the 1970s, the Canadian dealer network, the broker-dealer network in Canada, was not as efficient producing new gold companies as they are now. Although the gold price can go up, the amount of share certificates that Canadians can print is endless. It's tempered really by the limits of standing inventory of timber between the Atlantic and Pacific in Canada. And so the hyper-escalation in all gold shares that you saw in the 70s won't occur this time, because the Canadian dealer network will be able to print enough share certificates to satisfy demand by anybody under any set of circumstances. The reason, in my opinion, for the underperformance of the gold shares relative to gold in the last 3 years has been twofold. In the first instance, that inflation of share certificate has occurred. They've made many more companies. But the second thing is that the industry, as a consequence of 20 years of a bear market, is management challenged. There are many more opportunities than there are competent managers. All of these opportunities get filled, but given the fact that there aren't enough competent managers, most of the opportunities get filled by incompetent people. Gold has gone up in price because it can't incompetently manage itself. Mm-hmm. But many of these companies have been scandalously poorly managed.